Hi guys, you are welcome to
Gospel Praise Lick.
now. Here we'll be doing a practical example where we'll be solving question which requires us preparing adjusted cash book before bank reconciliation statement. But please, for those that haven't watched my first video and second video on bank reconciliation statement, where I discussed about what bank reconciliation statement really means, what bank statement also really means, we talked about the purpose and importance respectively. We talked about all these disagreements, the reasons for the disagreements, and how it can be corrected. Do you get it now? So please watch the videos before you move on to this. Now let's start. The name of the person that owns this account is still Emeka. That's why I've written it up here. So that's the first thing to do. Now when you move, Emeka maintains a business bank account with Second Bank Nigeria Limited. The bank statement received for month of March 1999 showed a balance of 14,265 to his credit, while according to his cash book, it should be having 13,380. Subsequent investigation revealed the following. Now, firstly, we are going to prepare our adjusted cash book. So you have your debit, you have your credit. So we have adjusted cash book. Now, when you divide this, you can see that all those amounts are in error. Don't forget to put it there. So the first thing there is to write the balance. We are given the balance brought forward of what? 13,380. You can read it. The cash book balance should be having 13,380. Now when we move on, we have this question says the check of this of A00011 for 3,400 and one of X22419 for 6,000 deposited to the bank on 28 March 1999 were not credited by the bank until 2nd April 1999. When we talked about this, we talked about uncredited check. You can see it was not credited, that is uncredited check. Now this will go to the bank reconciliation statement. But firstly, we are treating adjusted cash book. Three things is going to go to the bank reconciliation statement. The first one is your uncredited check, the second one is your unpresented check, and the third one will be your bank error. Those three things are going to the bank reconciliation statement. So other than those three things, the rest will be in the adjusted cash book. Don't forget. So you can see the star that I put there. We'll still treat that later. Now let's look at the second question. A check received for 3,000. A check for 3,000 naira received from a customer in full settlement of a debt of 3,300 has been entered in the cash book at the full value of the debt. Now the question is trying to tell us that a check of 3,000 naira was received in full settlement of a debt of 3,300. So they now they committed a mistake here. Instead of writing 3,000 naira that they received from the customer, they wrote 3,300 now, which is the full settlement of the debt. That is, they have paid the debt. Now, what happened there? You can see that what happened there was an overdraft. An overdraft of what? Overdraft of receipts. You know that you are receiving money from customers, so it's a receipt, it's an income, but you overcasted the amount. That is, you should be writing 3,000 naira, but you wrote 3,300 now. So if this is your cash account and this is your bank account, now your bank statement and your cash statement balance, you get now, you overcasted the cash. When you overcasted the cash, to adjust this, it means you are going to add the amount in which you overcasted that bank, the amount to the bank. Sorry for my English. What I mean is that when you overcasted this cash account, the difference, you are going to add it to the bank. You can see that the cash balance is bigger than the bank balance. So to solve this problem, you are going to add the difference to the bank so that it will be on the same level. So we'll move to the bank. That is, and to add this to the bank means subtracting it from the cash account, that is the credit side of this account. So you move here, you write over cast receipt, which is what 3,000. Don't forget, you are going to subtract this from this. The overcasted receipt is 300. So we have 300. That is, so let me write it out. That is 3,300 minus 3,000. So you have 300. You get it now? Now let's move to the next one. We have dividend of 650 received have been paid direct to the bank. We discussed about this in the first video of bank reconciliation statement. We talked about this, and dividend, you know, that is an income to the investors. Now this was paid directly to your bank, therefore your bank account will increase. When your bank account increase but you haven't done justice to your cash book balance, so as at the date of reconciliation, so you will need to add this amount to your cash or your cash balance anyhow. So now I'm going to add it here, dividend. We come to this side, so I'm going to add it to the amount, which is 650. Now the next one, a check for 6,500 issued to Jago was, wait, there's an error here, you made a mistake. So now there's a mistake there. The mistake was that we didn't complete the sentence. So a check for 6,500 naira issued to Jago was not presented. So we know this is clear, this is unpresented check, and it is going to the bank reconciliation statement. So you just tie it. Now let's move to the next one. The bank deducted a total of 125 naira. So that is also clear. That is bank charges. Now, when we are talking about bank charges, this amount was deducted from your bank. When you deduct it from your bank account is going to reduce, right? Now, to adjust this or to correct this error, you need to add it back to your bank account. So, and to add it back to your bank account, it means you deducting it from your cash account. That is the credit side of your cash book. Now, we have bank charges, which is 125 naira. Now, we have solved this. Let's move to this one. The bank had credited a check of 3,560 of V Amaka in error to T Emeka's account. So the bank made a mistake here. So this is an error, bank error, right? And I said it is going to the bank reconciliation statement, so it's certificate. So these three things are going to the bank reconciliation statement. Firstly, let's balance this up. Now we have our brackets. Now you can see that the debit side is bigger than the credit side. So you can just write the total in both sides. You get it now. 0, 8 plus 5, that is 13. So we have 3, we keep 1 here, we have 0. So we have 14,000. Wait, sure, we didn't make mistake. Let's look clearly. Yes, we didn't make mistake. So the total here is 14,030. Now we are going to subtract this amount from this. So when you have 14,030 minus the total of this is what? 425. Now when you borrow from this, you have 2, you have 10. So subtract, we have 5, we have 0, we have 3, we have 10, we have 6. So the balance brought down, carried down rather, is going to be 13,605. So that is our balance carried down. So we have balance brought down 13,605. Now we are going to prepare our bank reconciliation statement. So we are going to have bank reconciliation statement as at the date was March, okay, March 1999. You get it now. Now we are starting with balance as per adjusted card book. So we write balance as per adjusted card book. So don't forget the naira sign both sides. So the balance as per adjusted card book, sorry, is 13,605. Now the next one, what are you going to add to balance as adjusted card book? The way we usually do it is going to be your unpresented cheque. Your unpresented cheque is this, which we said a cheque for 6,500 naira issued to Jago was not presented, so it's here to be presented as at the date of reconciliation. Therefore, you are going to add it to this. And why are we adding it? Don't forget, when we are dealing with unpresented cheque, you have presented this cheque to customer, that is, you have deducted this from your cash account. You have deducted the money from your cash account. You can see that your cash account is now lower, right? But they have not done justice to it in the bank because the customer have not presented the cheque to the bank. So to adjust this, what you are going to do is to add the money back to your cash account. That's why we are adding it to balance as per cash book. Do you understand it now? So we have unpresented cheque. And the amount is what? 6,500. Now we have what? We have uncredited cheque here, which you have listed here. A cheque of A00. Now don't forget, uncredited cheque, we are going to deduct it from the card book because it is being added to the bank statement. And this is the explanation. You gave a cheque, but a cheque was taken to the bank. Do you get? Was lodged in the bank, but before the date of the reconciliation, as at the date of the reconciliation rather, the share have not been credited in the bank account. Do you get it now? So they have not credited it. And what will happen is that the cash account have increased. You have added the money to your cash book, but since they have not credited it to your bank account, therefore your bank account will still be lower. Now to adjust this, you are going to add the money to your bank account back. Do you get it now? That's why it is being added to the bank statement. And when it's added to the bank statement, you are going to subtract it from the card book. So you have less credited cheque. So the uncredited cheque is of two cases. We have AOO. So you need to write it. So let me adjust this. We have less uncredited cheque. So we have one of A000111. The amount is what? 3,400. And we have the second one to be this, which is S222419. Now the amount is 6,000 naira. So we have 6,000 naira. Now the last one, which is the one of bank error. Now, do you know that bank error, it does not occur in the card book and the bank account? Why? Because this bank error doesn't concern the card book and the bank account. Look at firstly, let's read out this question. The question says the bank had credited a cheque of 3,560 naira or V, a marker in error to Emeka's account. So they mistakenly credited Emeka's bank account. Now, how do we solve this problem? Since they have mistakenly credited his account, now his account will be greater, his bank account will be greater. Do you get it now? What you are now going to do to adjust this is to debit the bank account, the cash account rather. When you debit the cash account also will be greater. Therefore, they will be in the same level. When you debit it with the same amount. Do you get it now? So that is how to adjust it. That is, this amount here now, since they have credited it to his bank account, we are going to debit it to his cash account. Therefore, we are going to have bank error here to be added to this unpresented check. So don't make this mistake. You are going to write your unpresented check to be here, which is 6,500. Now you are going to add the bank error, which is 3,560 to it. So addition of these two is going to give us 0,6,0,10. So that's the addition of both. Now let's add it to the balance as per adjusted cash book. Now when you add this up, you are going to have 5,6,6,3,2. So we have 23,666. Now what is the addition of these two? The addition of these two is going to give us 9,400. So the addition of the two is going to give us 9,400. So we are going to subtract, don't forget, less. We are going to subtract the amount from this. When you subtract the amount from that, you are going to have what? 14,265. Now, so now what's going to be here? What is going to be here is going to be your balance as per bank statement. So we are going to have balance as per bank statement. Do you get it now? Now, how do you know that you are correct? When you move to this page, we said the bank statement received for the month of March 1999 showed a balance of 14,265 to his credit, and you see that what you got as a balance as per bank statement is 14,265. So this shows that we are correct with what we did. You get it now? Thank you for watching. Please don't forget to like, share and subscribe to my channel. Bye. Love you.